Saving for retirement is one of the most important financial goals, yet many Americans struggle to set aside enough money. To encourage saving, the U.S. government offers the Saver's Credit, a tax credit designed to reward low and moderate income individuals for contributing to their retirement accounts. If you qualify, the Saver's Credit can directly reduce the taxes you owe, making it easier to grow your retirement savings. This guide explains what the Saver's Credit is, who qualifies, how much you can claim, and how to apply. The Saver's Credit, officially known as the Retirement Savings Contributions Credit, is a tax credit for individuals who contribute to eligible retirement accounts. Unlike a tax deduction, which lowers your taxable income, a tax credit directly reduces the amount of tax you owe, potentially saving you hundreds or even thousands of dollars. The Saver's Credit applies to contributions made to traditional or Roth IRAs 401k 403(b) and 457(b) plans, simple IRAs and SEP IRAs thrift savings plans, TSP for federal employees. To be eligible for the Saver's Credit in 2025, for the 2024 tax year, you must meet the following criteria. First, age and filing status. You must be 18 or older by the end of the tax year. You cannot be a full-time student, and you cannot be claimed as a dependent on someone else's tax return. Next, let's talk about income limits for 2024, when filing in 2025. Your adjusted gross income or AGI must fall below certain limits to qualify. For 2024 tax returns, the income limits are as follows. For single filers, the maximum AGI to qualify is $36,500. For those married filing jointly, it is $73,000. And for head of household, it is $54,750. If your AGI exceeds these limits, unfortunately, you do not qualify for the Saver's Credit. The credit amount is based on your income and contribution amount. The lower your income, the higher your credit percentage. Here's a breakdown of the credit rates. For 50% of your contribution, the AGI limit for single filers is $0 to $22,000. For head of household, it is $0 to $33,000. And for married filing jointly, it is $0 to $44,000. For 20% of your contribution, the AGI limit for single filers is $22,001 to $24,000. For head of household, it is $33,001 to $36,000, and for married filing jointly, it is $44,001 to $48,000. For 10% of your contribution, the AGI limit for single filers is $24,001 to $36,500. For head of household, it is $36,001 to $54,750, and for married filing jointly, it is $48,001 to $73,000. The maximum credit is $1,000 for individuals and $2,000 for married couples. The credit applies to contributions up to $2,000 per person, or $4,000 for couples. Let's say Emma is a single filer with an AGI of $22,000 and she contributes $2,000 to her 401k. Since her income qualifies her for a 50% credit, she will receive a $1,000 tax credit. If Emma owed $1,500 in taxes before the credit, her tax bill would be reduced to $500. How to claim the Saver's Credit. First, contribute to a qualified retirement plan. Make contributions to an eligible IRA, 401k, 403(b), 457(b), or TSP before the tax deadline. Next, file IRS Form 8880. Use Form 8880, credit for qualified retirement savings contributions, to calculate your credit. Then, report the credit on your tax return. Enter the calculated credit on Schedule 3, Form 1040, Line 4. Finally, submit your tax return. File your taxes electronically or by mail before the deadline. Why you should take advantage of the Saver's Credit. It reduces your tax bill. Unlike deductions, a credit directly lowers what you owe in taxes. It also boosts retirement savings, encouraging long-term financial security. Plus, it's available even with small contributions. Even a $200 contribution could earn a credit. Start saving and claim your credit. If you qualify for the Saver's Credit, you're leaving money on the table if you don't claim it. Make contributions before the tax deadline, file IRS, Form 8880, and take advantage of this valuable tax break. Need help maximizing your tax savings? Contact SK Tax Associates today.